Hi everyone, it's Emily Carter, and today we're diving into Lockheed Martin, one of the most powerful defense companies in the world. With global conflicts intensifying and military budgets rising, Lockheed Martin is standing at a fascinating crossroads between massive opportunity and serious operational risk. Let's explore what's really happening inside America's defense giant. Lockheed Martin, ticker symbol LMT, trades at around $495 per share, with a market cap near $118 billion. It's the largest defense contractor in the US, earning 97% of its revenue from the US government and its allies. The company dominates in fighter jets, missiles, and space systems. Everything from the F-35 Lightning II to PAC-3 interceptors and Orion spacecraft. In short, it builds the technology that defines 21st century warfare. But the story isn't all smooth flight. In Q2 2025, Lockheed stunned investors with a massive earnings miss, reporting just 1.46 EPS instead of the expected 6.54. Why? Program charges totaling $1.8 billion, including $950 million on a classified aeronautics project and losses on helicopter programs in Canada and Turkey. Despite this, revenues held steady near $18.2 billion, proof that customer demand hasn't faded. But these recurring project issues raise serious questions about how effectively Lockheed manages its most complex defense contracts. Now let's talk about what keeps Lockheed on top. First, real-world validation. The company's systems have proven their worth in combat. The F-35 dominated air missions over Iran, and PAC-3 missiles successfully intercepted ballistic threats. That kind of credibility fuels future contracts. Second, government partnerships. The Pentagon's new Munitions Acceleration Council plans to double or even quadruple weapons output. That's huge for Lockheed's missile and munitions lines. And third, a $167 billion backlog. That's like having over 2 years of guaranteed revenue already booked, a powerful buffer against volatility. But investors can't ignore the turbulence. Lockheed's gross margins are thin, around 8%, unusually low for a company of its scale. Free cash flow for 2026 is expected to shrink to about $6 billion, down from earlier projections. And let's not forget that $4.6 billion IRS dispute, a potential storm cloud over the balance sheet. The Pentagon also plans to reduce F-35 orders in its FY26 budget request, although Congress might push those numbers back up. Still, it's a reminder that Lockheed's fortunes are tied tightly to politics. Technically speaking, the stock still looks strong. It's rated a strong buy by several analysts, with a fair value estimate of $526, about 4% above its current price. The PE ratio of 28 is high for a defense contractor, but investors seem willing to pay for stability. Its beta of 0.27 shows how defensive this stock really is. When markets fall, Lockheed barely moves. Looking ahead, Lockheed's future may hinge on geopolitics. Recent US-Turkey talks hint at lifting sanctions that could reopen F-35 sales to Ankara, a potential multi-billion-dollar deal. The US administration is even considering taking equity stakes in key defense firms, a move that could provide stability and secure government backing. As global defense spending climbs toward record highs, Lockheed's leadership in AI-enabled combat systems, missile defense, and hypersonic technology keeps it front and center. So, what's the takeaway? Lockheed Martin is a fortress stock built on government contracts, advanced technology, and global demand, but it's also facing execution challenges that could limit growth. At around $495 per share, the upside is modest, maybe to $550 or $580 long term, yet the downside protection is solid. For conservative investors, this is a cautious buy. Stable dividends, low volatility, and exposure to one of the most critical industries in the world. Thanks for watching. I'm Emily Carter, and this was Lockheed Martin, America's defense giant at a crossroads. Don't forget to hit like, subscribe, and drop your thoughts in the comments. Which stock should I cover next? See you in the next episode of US Stock Stories.